Sunday Night Live!
Sunday Night Live, let's trade. Sunday Night Live, let's trade.
Welcome in. Lights up, we're rolling. Who's locked in and ready to go? From the open to the future's flowing. We're the crew that wants to know. Stocks on deck, who's watching?
We are.
Shots on fire, hearts all locked in.
We are.
Welcome to the Sunday Night Live trading show. When we say ho, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. Join us as we ride every wave, high and low. Huddle together, let's trade. Energies move tick by tick now. Metal shine, golden grit now. Crypto swings wild and reckless. We don't think. We break it down, turn the stressless. Link by link. Welcome to the Sunday Night Live trading show. When we say ho, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. Join us as we ride every wave, high and low. Huddle together, let's trade. Oh, let's trade. Let's trade. Oh, let's trade. Who's in the huddle?
We're in the huddle.
Who's got a plan?
We've got a plan.
Who's trading smart now?
We're trading smart now.
All together,
Raise that hand.
welcome to the Sunday Night Live trading show. When we say huddle, you say let's go, let's go. Oh, let's go, let's go. Oh, let's go. From stocks to energies, metals, crypto flow. Huddle together, let's trade.
Well, hello everyone. Welcome to the Sunday Night Show. It's James here, your host, and it's good to have you all here. And welcome to the new channel. As you will know, probably if you're here, I suppose we were hacked last week, on Friday actually, 48 hours ago, and my entire YouTube and Gmail has been taken down, stolen actually. It's a long story how it happened, but ultimately it was my fault, I suppose, and it's all gone. It's not retrievable, it looks like. So we're going to start afresh here, but this will be mainly for members now. And for those who've been in the private group, this will be one of our main channels for operating the private group, within the private group and this channel. Of course, there will be some public videos like the Sunday Night Live and a couple of others during the week, but most of it will be for members. So if you're a member, bookmark this channel. And if you're not a member, make sure you join if you want to be part of it. Now, I'm going to lead on to that. I'll get into this in a minute, into the notes on the page, but we've got 4 minutes to go, 6 minutes to go before we start. I wanted to start a little bit early to get this all set up to make sure that this new channel actually works. It seems to. The fact that I'm here and you're here seems to indicate that it's all good. So that's the first thing. The other thing I wanted to tell you about for members specifically is that from tomorrow, I'm going to start doing some Bitcoin day trading of 5-minute charts. If that's what something that interests you, come and join us in the private group. There will be a private link. Will be a day stream, permanent stream on while I'm trading. There are a couple of other YouTubers that do this, and just day trade live and then disappear, come back again the next day and do the same thing. So I'm planning to try that out. I think there are plenty of opportunities to day trade crypto and Bitcoin in the coming weeks and days, as we may have a trend establishing. It's a very tentative comment. Of course, we'll look at the chart shortly. But if we are going to move into a more trending market, I'd like to be able to day trade some Bitcoin. So we'll be doing that too. So starting tomorrow, and if you're in the private group, make sure to look out for the links, which I'll put up in the private group membership room. And we'll be day trading Bitcoin and maybe Ethereum too. So check that out and make sure. And what basically the format will be, just me in front of the screen, and you'll see my charts and me taking trades. And the objective of this is to try and maximize the run or the move that we might be, and it's preemptive. It doesn't mean it's going to, but we might be entering a bit of a bull run across assets, including Bitcoin. And if you are going to day trade, it's a good idea to day trade either something that's very technically stable, like gold. A lot of people day trade gold, or the euro against the pound, which is the two instruments I used to day trade a lot, or the Nasdaq or the S&P. But they're all good. They're all great. They all move very technically and quite good to day trade. But sometimes lacking volatility, especially the euro and gold. And so when volatility is down, day trading becomes very difficult. And day trading works in a ranged market and in a training market. But what we do need is volatility. And I think we have enough volatility and entering a potentially higher volatility period to get into a bit of day trading. So members, I'll see you tomorrow in this on this channel. Probably we'll either do it here or in the private group in the Circle streaming app that's in there, but I will let you know. Anyway, that's just a bit of ramble as we start off. We've still got 3 minutes to go. I did want to start this movie a little earlier to make sure that everyone could come in and find their way here. This is the new Arcus FX channel. I'll change the name in time when it becomes absolutely apparent and clear that my old channel may not be recovered. And I think it's 99% sure that it's not possible. It's been stolen and hacked. And the YouTube guidelines say that they are not responsible for any of that. They just provide the hosting service. Everything else is up to us as YouTubers, or even users of Gmail. That's a more serious issue. Now, I just want to reassure everyone that's part of the private group or on YouTube here or on X, anywhere that you interact with me, you're not compromised. You haven't been hacked. I've been hacked. You're quite safe. Our private group is completely secure. We've moved to a pretty expensive and very secure Circle application, which is completely separate from anything else. And so members' email addresses are safe. I just wanted to assure you of that. All right, so that's the news, folks. We've been hacked, and this is the new channel. We'll be doing all of our public movies. Movies, I keep on calling them movies. I think I've got movies on the mind. I've been looking at the Apple TV movie guide for tonight for later on. But all of my videos will be on this channel now, I suppose, unless by miracle, some miracle, Arcus FX is returned to me. I don't think it's going to happen. So there you go. So it'll all be here. But we'll be doing some day trading on Bitcoin starting tomorrow, probably on this channel or in the Circle app. So members, come with your day trading boots on tomorrow if you're interested in that sort of thing. All right, now we've got a couple of minutes before we actually click into the start. I'm surprised that there are so many people here. So welcome to everyone. I see there are 53 odd people, only 15 on YouTube. I guess the rest are on X and maybe on Facebook. But it's going to take a long time for people to find this channel, and I'm not even going to monetize it. So it's not a revenue source for me. It's a source for me to communicate with members and the public. And so even though the previous channel was pretty well monetized, 2,000 videos on Arcus FX, over 3.3 million views, 2,000 videos, a lot of course material, and a brilliant community of 13,700 people, all gone, completely just gone, stolen. And the hackers put a crypto spam video up, an AI spam video, and let it run and run and run until YouTube took it down. So not only that, YouTube's also banned the channel for violation of guidelines, even though it wasn't me. What a mess. So yeah, so that's 3.5 years of work, 13,700 strong community, 2,000 videos, and about 3.3 million views, and countless viewing hours on top of that. So it's a real pity, folks. So it really is. And for most YouTubers, it would be an absolute blow, an absolute death blow for their, for what they're doing and for their I suppose, aspirations in YouTube. But luckily, I'm not a YouTuber. So although I have a YouTube channel, I'm not a YouTuber. So I'm very pleased and grateful that this is just a very minor setback. And I'm going to be very, the Greek philosopher, trying to remember his name. I keep on forgetting it. Anyway, it's not Euclidean, it's something else. That's mathematics. But anyway, the philosophy, I'll think of the name now, who said, the Greek philosopher said, as long as you have work and you're busy and not idle, and I've added a little bit more, and as long as at least one person else loves you, nothing else really matters, and it should be sufficient for you. So as long as you're healthy, alive, people love you, things can go wrong, awfully wrong all around you, but it's your attitude towards that matters. So I'm not going to be defeated or upset by any of this, and we carry on. Doesn't really matter to me, and I'm welcome to all of you, and thank you for making the effort to come here. All right, folks, having said all that, let's get into it. And we're officially starting today's stream. after all of that. And let me get into it now. I'm going to start with this weekly deep dive. I've already put the notes up in the private members group area. So if you've got membership, you can go and get your own copy of this. Let me just quickly check that everyone can hear me well. And going on to the comments. And just let me greet everyone actually before I start and say hello. Hello from Vishesh, the gas giant. A lot of people asking in the private group just a few hours ago, a couple of minutes ago actually, about natural gas and oil. Oil has spiked up over the weekend, I think, but it's not just because of the peace deal in Ukraine, in Iran that went awry. It's also because of Ukrainian strikes on oil facilities in Russia, in the ports. Significant damage done, apparently. And that's, don't forget, there's a war going on there too, which involves oil and gas and everything else as well. So, sorted the hack. Well, it's not sorted, David. Unfortunately, I've been set back by 3.5 years on YouTube. It's not sorted at all. And I don't think I'm ever going to get my channel back. But that's okay. I think the great pity is the community has been lost, and I'm hoping, thank you, Martin, I appreciate that. I'm hoping that we can build it back up again. But I think I've run out of energy to put too much effort and focus into a YouTube channel anymore. It served its purpose. It was good for, everyone to get to know me and me to get to know everyone else. But do we need it anymore? I'm not sure. But we will be doing Bitcoin day trading on this channel or in Circle. So members are going to be treated to something special. Right, now, let's read some more. Hello, Ole. Nice to see you, mate. Yeah, I worked really hard, Martin. Really, really hard. Anyway, let's get into the notes, folks. And let's have a look. The macro story. So growth softening, inflation is re-accelerating. And that's not a good combination of softening growth and in renewed inflation pressure. And we saw this in the numbers that came out. The GDP number was poor, barely positive. Labor data was, iffy, and inflation was increasing, ticking up slightly on PCE, CPI, and etc. And so we've got this, slowing down in growth, GDP at 0.5%, 0.4, I see it, at 0.5, and inflation just ticking up. And that word keeps on coming up week after week as you watch these videos, the stagflation word. PCE, the Fed's preferred inflation gauge, came out last week, and we had an increase, a headline of 0.4, in line with expectations, but not dropping, and actually slightly higher than prior to that. Annual held at 2.8. So it's not great, but this is meant to be below 2%. Remember that, folks. And above 2.8, 3%, close to 3%. That's 33% higher than we want. It's not just, a little number. It's quite a lot. All right, so the PC didn't buy the Fed much room. Inflation is sticky, and so it's difficult for them to cut. But if the jobs market starts dropping off and GDP growth starts dropping off, we haven't talked about that. It's not in the Fed's gambit or in their, it's not their job to look at GDP, but it all comes into the same picture. And then CPI, seeing the war impact, and of course, not just the war, tariffs as well, with lagging impact of tariffs. And CPI rose 0.9% month on month and 3.3 year on year, up from 2.5. Really, really bad news from an inflation point. So PC was warm, CPI got hot, and then jobs weren't good either. Not bad, just ticking over. But when we saw the NFP last month, beginning of this month rather, the first Friday of this month, we got the non-farm payrolls job report coming at only 50,000 jobs. Very, very poor. So jobs are weak, growth is weak, inflation's ticking up, and now we've got two wars on our hands too, one directly involving the US. So tricky stuff. And now we've heard over the weekend that there is no peace agreement having been reached. I was watching JD Vance on the TV just now, looking quite impressive really for a young man, I have to say. When I call JD a young man, that shows how old I am. I suppose he's 40, 45, something like that. Whether you like him or not, he's pretty impressive. And doing a big job over there in Pakistan, a hostile country in some ways, with a hostile opponent on a massive big world stage with a huge war going on. Big up to JD. Whether you like him or not, I don't really like him or dislike him. I don't actually care, but it's a big job that he's doing. So yeah, all that stuff going on, and not good news really from any front. And of course, we saw oil spiking up as a result of that, but also because of what's going on in Russia, in the ports, in the oil storage facilities, and the refining facilities. GDP, we've talked about. Inventory and activity, wholesale inventories increased. It's not inherently bullish. In fact, it could be could be seen as bearish in a way, but nevertheless, just something to watch. And then the Fed, the new Fed chair, M2 and Treasury buybacks. Right. So we have been very quiet about the Fed. We haven't talked a lot about what the Fed's been doing and what they've been up to and what they've been saying. But maybe we should start to think about it now a little bit more as we approach the new Fed chair. We've seen M2 money supply increasing, GDP's weak, and they've got a lot on their hands deciding about interest rates, considering inflation ticking up, but growth ticking down, maybe needing a bit of a stimulus, maybe quite a large stimulus. Maybe, for the economy, M2 money supply is one stimulus, but inflation rates not only help the economy when it's easy to borrow money, but it's also just in the minds of people, it will reduce things like poor expectations that the US tends to measure, expectations for inflation, for growth, for cost of living, all of that stuff, that these numbers that come out will tick up naturally when interest rates come down. And that just adds to a little bit of the buzz in the market. All right, so I don't want to talk too much about the Fed. We'll find out now. Iran, there's not much to talk about really other than that the JD failed and the delegation failed. I wouldn't call it a failure. I'd say it didn't work out. And of course, oil has spiked up again. But we'll look at the oil chart. It doesn't look bad, by the way. And I know a lot of you are panicking. I haven't been into the private group in the last hour or so, but I saw a few comments about oil with the peace talks failing and Russia ports being bombed by Ukrainian drones, and a lot of talk about it, but and a lot of panic. But don't worry about it. I think the charts look okay, and we must go by the charts, no matter what the news says. And as that famous song goes, the Whipsaw song, stash that news right in the trash, right? We don't trade on news. We trade on the technicals on the chart with a news background or tapestry informing us, the tapestry of international events and local events in the countries that we trade instruments within informs our approach to the market. In general, the macro picture informs our technical approach. But the technical approach is how we enter the market, how we take trades, how we decide the levels, how we decide timing and trend directions and all that sort of thing in alignment with the macro stuff. And so you need to be good at both, but probably better to be pretty good at charting rather than anything else. I've always, since I've been trading, and it's, one day it'll be 40 years. It's only about 33 now. In 7 years' time, I'll have been trading for 40 years. That's most people's entire career. And I'm only just getting started, folks. I'm only just getting going. So, but there you go. And I can't even remember what I was saying. Trading a long time. What was I about to say? Someone will remind me. Can't remember. Anyway, get back to it. Anyway, oil. Yeah, so oil up and down. But when I was saying, you look at the charts after 40 years of trading and seeing the debate between macroeconomic traders, right? Whatever you call them, people that trade off economic news, and then people that trade off only charts. Neither of them are the best type of traders. Those that understand the macro environment and trade well off the charts are the best traders. But if you had to pick, and I know this for a fact after 40 years, if you have to pick, turn off all the news, turn off your TV, turn off Twitter, turn off YouTube, cancel your subscription to the local newspaper and the New York Times, and look at your charts and trade off your charts. And if you do that, you'll probably still be pretty successful and profitable. But if you trade off the news only and you don't understand the psychology behind it all and the flip-flops and the mass herd mentality and philosophy and stuff, you'll probably make more mistakes. It's much easier to read a chart. Let me just say it like this. It's much easier to read a chart than it is to read the human mind. All right? Simple as that. And put that in your pipe and smoke it. All right, let's move along. Now, why is that expanded? All right, other geopolitical events that matter. A couple of things there. Let's just go. Cross-market implications. Now, let's read through this very quickly. And in 5 minutes, we're going to go straight across the charts, and we will continue to finish off this session for the next 45 minutes on the charts. So bear with me. It's really important that we go through this stuff. I know for some of you, it's pretty boring, and you don't want to do it, and you don't really care, and you just want to get to the charts, and you just want to know if we should buy Bitcoin or sell gold, or buy oil or sell natural gas. You just want to know that. I know. That's fine. But it's important for some people that we understand the background to all of this, as I just said. But if you're only interested in trading the charts, come back in 5 minutes time or wait for the recording. So equities are not in a clean crash. And we'll again look at the charts. They're in a rotation and a repricing phase. We saw a massive rally out of the lows last week. Very, very impressive. I'd call it a breadth thrust even. In other words, we got massive volume across a whole breadth of instruments and sectors, leading up into a massive rally in the market, which pushed us up through all the technical levels in one fell swoop. It's called a breadth thrust. We've seen them often before, every few years, and we saw one after the tariffs. We'll talk about it on the charts. I did talk about this in the video last week, which I would say to you now, go back and watch, but I can't do that because it doesn't exist anymore. All of those videos are lost to cyberspace. Atoms now, atoms or electrons or something, but they're not videos anymore, I suppose. So I would say go back and watch the video about all of this, but I can't because it's not there. But I think that they're doing okay, and we've got some serious headwinds in terms of the two wars, Russia, Ukraine. Everyone seems to forget about that. It's still killing 30,000 people a week. We're still blowing up gas and oil fields and pipelines and factories and refineries. So all of that plays into the energy market as well. So there you go. So yeah, let's have a look. It's not a clean crash. Oil, gold and silver. I think we'll just go to the charts, folks. So there's no point in me going through all of this because we're going to have a look at it in the charts anyway. So growth is softer than so let's just go through the summary of what I've just said. And we've got, its timing's perfect because in 2 minutes time, we'll go straight into the charts. So growth is softer, as I said. GDP was revised down to 0.5%. Jobs are only stable. They're not strong, as I said earlier. And the consumer only got a temporary lift in that gasoline prices may soon reverse. Right, so gasoline prices, I'm not sure what they are at the moment. I'm sure they will have come down a bit over the weekend as some optimism crept in. And as the oil price ticked down below the sort of $100 level down to into the low 90s on Friday, and I'm sure gas prices would have come down, certainly in the US, but I don't know, you'll be able to let me know if you're in the US, maybe not in Britain or in Europe. So yeah, but that, those might go back up again. Inflation has re-accelerated through energy and supply channels, and I'd add tariffs, the delayed effect of tariffs onto that, which Jerome Powell keeps on warning us about and saying, there might be a delayed effect. Maybe this is it. PCE stayed sticky, CPI jumped, and the Iran war flipped the oil market back, flip-flops, big time. All right, that's it, folks. So I think all these notes are up in the private group membership area, and you can go and check those out. And let me go back here and see what's going on. Yeah, all right. Robert, yeah, no worries, mate. No worries. Yeah, no worries at all. All right, folks, let's go straight into the charts and bear with me while I flip over. It's not easy. It ain't easy. Stop screen. Share screen. Window. All right, here we go. All right, beautiful. We've got the charts. We've got the microphone all set up. Everyone's in the room. Let's get into it. And I'm going to start on this top left-hand page and have a look at the US dollar. So, folks, actually, on this page, it's another new thing I've introduced. Let me just tell you all about it. On this page, and I did mention it briefly in the videos last week, on this page, I've got 8 instruments, and these are the 8 instruments that I want to focus in on mostly, not exclusively, but mostly over the coming weeks and maybe months and maybe the rest of this year, which is about 9 months. Actually, less than that now, probably only about 8 months. So 8 and a bit. So it's the dollar, Bitcoin, NASDAQ and S&P, silver and gold, WTI oil, and natural gas. These are the instruments that I'm going to be focusing on the most, having selected them from all of these stock names and indices. I've selected just the NASDAQ and the S&P. From all of these coins and altcoins, Bitcoin and altcoins, I've selected just Bitcoin. All the most technical and most easy to trade and most trend-worthy instruments. Gold and silver, of course, which we'll talk about now, but not copper and platinum. Natural gas and oil, and not uranium and platinum and lithium and all that sort of thing, which we have on at the moment already. And then on this page, nothing really. I don't think we'll be trading any of this much. So it's really back to this master page when we'll be focusing on, I think we can make a lot of good trades here. And my objective in the next period, if I'm right, and I hope I am, that we're going to see a massive asset rally going forward. It might be very choppy to start with over the next weeks, maybe months, maybe, but probably more like weeks. Very messy. And a lot of the stuff's got to be worked through the system, resolved. We've got to see what the Fed's going to do, what the new Fed's going to be like. Are they going to cut rates? What's M2 money supply going to do? Is it going to carry on increasing? And what is the resolution in Iran, the Straits of Hormuz, oil prices, the major driver? So all of this will create a bit of mess at the moment, probably for a month, let's say, maybe a bit longer. And when that all settles down, the markets will determine the direction that they want to go in. And really, it's either up or down. Are we going up on assets for the rest of this year into next year? Or are we going down on assets once all the messes settle down in the war, in both wars, and the straits and interest rates and the new Fed, all of that? Once that's all been settled down, what is the direction? That's the main question, isn't it? That's all what we want to know. Are we going up on the markets or are we going down? Are we going up on metals or are we going down? Are we going up on energies or are we going down? And finally, are we going up on cryptos or are we going down? Once we know the answer to all of that, and so far I think I do, and my answer is yes, up on everything except for oil. That's my answer, but I'm prepared to be completely wrong and get it completely wrong. And so, but that's my answer for now, until I'm wrong. And until I'm wrong, that is it. So I'm going to be looking to buy, and down on the dollar, by the way. So it's down on the dollar, down on WTI. So oil and the dollar down and everything else up. Gold, silver, Bitcoin, NASDAQ, S&P, and natural gas. All right. So that's my plan. And in fact, I think, we should look at mainly just that today. And let me just go into some of these charts. Now, I haven't prepared all the charts on this master. It's called the master page. I think you can see it. You can't see it. The top of the page is missing actually on the live stream, but the label for this page is called the master page with these 8 instruments. But I haven't set these charts up properly yet. And so I'm going to set them up. I'll go through the existing charts with all my labels. By the way, while we're here, this chart here is my Bitcoin scalping chart. Look how simple it is. I've got a moving average, some candles, and an RSI. And I can use this system to consistently profit from Bitcoin every day. Maybe not every day, but most days, certainly most and almost all weeks. And so I'm going to be teaching this in the live stream tomorrow. Online here in this or in the circle thing. So if you really are interested, and this is real, right? I'll be trading it live with real money, showing you my positions, showing you my trades, how much money I've made or lost, and you'll be able to watch it and take similar trades and see why I'm doing it and why I'm getting in, why I'm getting out. And it's this page that you can see it right in front of you here is it. This is my setup. It's really, really simple. And so if you want to be part of that, and starting tomorrow, join the private group. There's a link below this video and you can join and just do it. Even, it's going to cost you $97. It's not a big risk. I hope that you'll be able to make that back in the first day or the first week. But let's see. I'm not going to make any promises. It may not work. I'm pretty confident about it, but let's see. Now, let's go straight into the charts. Now, as I said, and I've got to go back here. I'm rambling today a little bit. I've got to go back here. First thing I want to look at is the US dollar, and then I'll go into the other charts. So the US dollar has moved down quite beautifully, although we gapped down and left a big gap behind us. My general idea on the dollar is that we are moving down. This is a bear flag, and that the next target for the dollar is somewhere down into the low 90s. At the very least, this lower 200-period Bollinger Band at 94, we haven't quite reached it. And we don't often reach the lower 200-period Bollinger Band, but when we do, and we're quite close to it, this is a weekly chart, that might be the level. But I think we're moving down, and I think we've moved down. We're in the middle of a bear flag. We've rejected the top again for the 3rd time on this weekly chart, and a massive weekly push down. There's the weekly 50 and 20-period moving averages. We've got to get through there. Not a lot of volume on that move down so far, but, a little bit. Not bad, but, it could be better. So, lacking a little bit of volume, and we are now about below the point of control here on this chart. Going back to the day chart on the dollar, we may have to retest into the gap. And I wouldn't be surprised, actually, if we open up in a few hours' time from now having gapped up to that 20-period moving average because of what happened with the peace talks over the weekend. The Forex markets don't often gap over weekends, but when they do, that gap is often refilled, filled quite quickly. And so we do gap up over the weekend, like tonight, in a few hours' time. In fact, I think it's quite likely we didn't manage to break that support. This is the day chart on the dollar index. Didn't manage to get through the 20, 150 period, the 100, 50, and 200 period moving averages here. And we spiked into it on that first attempt down. We didn't manage to get through it on Friday, this candle. And I wouldn't be surprised if we actually start up here on the roll, on the start tonight. And that will be in, it's 18, 19, 20, 21, 22, 23, 24. That's about 5 hours from now. And then we start like that and then immediately start moving down and then break through those moving averages. When the dollar moves down, let's make it red. When the dollar moves down, it will propel or tend to propel other risk assets up. Things like silver and gold, stock markets, Bitcoin, that sort of thing. So let's see. I think what we're going to see, let's just go back to this chart. I think we're going to probably see, just now that I think about it, with what happened with the peace talks and with the bombing of Russian oil facilities by Ukraine, severe bombing, I believe, over the weekend. I haven't read all those reports properly yet, but I think we'll gap up on the dollar and gap up on oil too. Both of them will give selling opportunities, right? Sell into the rallies on the dollar, sell into rallies on oil. That's all I'm going to say about the dollar for now. And then I'm going to talk about the NASDAQ. And let's have a look at the chart that I've already got up here. This is the NASDAQ day chart. And a couple of really good things here. Apart from the fact that we're very overextended, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish days. When you get almost all white, apart from that little one in the middle, when you've got 9 I go for 7, 9, 13. Those are my 3 sequential series of numbers. When you get 9 or 13, it's likely that, or 7, it's likely you will get a pullback. Now we've broken fractionally above this, what I've called a bull flag high, and above now all the moving averages. After that breadth thrust, look at the volume, massive volume here with that thrust, right? That's called a breadth thrust, huge volume across multiple sectors with a very broad ranged move. That's what happened here on the left with the tariff. And we got a Zweig breadth thrust out of here. This is not a Zweig breadth thrust, but it's a breadth thrust nevertheless. So what's likely to happen, right? We've got a blue line there. I think we're going to have to pull back a little bit, right? If there's really bad news from the Gulf, then this is probably going to pull back as oil rallies up. Look, there's the 250 period moving average cluster there. And I think we could bounce into that level and maybe gap into there. We might, there might be a lot of gaps over the weekend, folks. Gap into there and bounce out. We've got to get through the top of, first of all, the pink flag, bull flag, and then the green rectangle in order for us to get moving higher up towards about 28 or 30,000, all the way up into this region here, close to 30,000, which is actually the 0.618 Fibonacci projection. Interesting level. And notice I've got an arrow up there where I'd be looking to sell the NASDAQ if we get there. So my idea really, let's make this one green. I hope I'm not rambling too much, folks, and this is all useful teaching and training. Not all of it is about the current markets. I'm trying to increase the level of teaching as well. I hope you find it useful. So yeah, I think this is kind of where we're heading. I don't think it's going to be this quick, but I think this is my idea for the NASDAQ and stock markets in general. So basically, unless I'm wrong, and I could be completely wrong. I don't mind being wrong. I'm often wrong. But I'm going with the trend. The trend's up. We've broken through the top of this pink flag. We've got the green flag above us. And we may have to pull back over the weekend because of oil tariff, oil fears in the Middle East and in Ukraine, Russia. We might have to pull back. And maybe we'll have to pull back even a little bit lower. Notice this ledge here at the bottom of the green block. That's also quite beautiful. And maybe we've got to pull back down to there and bounce out of there. But nevertheless, it's either the blue line and this moving average cluster of the 50 and the 200, or it's the bottom of that green block. And if we do get to the bottom of the green block, it's also a Fibonacci retracement level. If I drew that there, you can see, oh, I've got a fly in my eye, a fruit fly. If I draw that Fibonacci right from the very bottom to where we got to at the top on Friday, and we look at where that pullback level is to the bottom of the green range, the green rectangle, it's exactly 38.2% precisely. And there's the 50% below there, and that channel center line, we may, as I said on Friday in Friday's video, which you cannot see anymore because it's in smithereens in atoms or electrons, I said we may have to pull back even deeper to the channel center line and the 618 or the 50% retracement. Any of these lines, that dotted line in the middle is the channel center line. There's the 618, and there's the 50%. I think we'll probably aim for the 38 now that we've broken through the channel top, through the pink zone top, meaning that we've got a strong rally now, not a weak rally. And I think we'll get a weak bounce. I mean, a weak pullback and a strong bounce. And so that's the sort of thing I'm looking for on the NASDAQ. We may even just get back down to the blue line, probably more likely actually, but allow for deeper dips. But I think this area is probably going to be the juiciest. Down at 24,800, which is the number that I gave you on Friday in Friday's video too. So that's the NASDAQ, folks. I'm not going to go through all the other ones, but exactly the same thinking. On the S&P, same thought, almost identical picture. Big Zweig thrust. Look how we bounced off the trend line. And also, interestingly, see that trend line that we bounced off on the S&P? Let's reset this. It's a long-term trend line, this black one running up the middle here. Notice on that last tariff collapse, we broke right through that trend line and then bounced out of it with that Zweig breadth thrust that we were talking about earlier. And that trend line got wrecked, destroyed. But it doesn't mean it's now invalid, because the next time we got back down to that trend line, which was destroyed and wrecked during the Zweig breadth thrust, did not invalidate the trend line. It bounced out of it on this last occasion just a few days ago, showing that trend lines, even when they get wrecked with a REKT, they can still be valid in the future. One of the very big proponents of this on YouTube is Gareth Soloway, whether you like him or not. I don't particularly. Good on you, Gareth. Good mate. You're a good man. Whatever. I don't know you at all, but whatever. But you are a big proponent, Gareth Soloway, of trend lines being revisited in the future, whether they've been from miles and miles, years and years, and even decades back. And sometimes even trend lines that have been previously broken and retested from either the top or the bottom. That's exactly what happened here on the S&P. And that's where we got long on that dip down. I don't have a green arrow in there, I should do, but we did buy the dip as well. And on the NASDAQ and the S&P into that level. So that's it on stocks, folks. I'm pretty bullish, but allow for pullbacks and allow for messing around this weekend. And because of what's going on. Same with Bitcoin. Now, Bitcoin, I'm just going to, you can look at all the other charts on this page. You can pause this video, see where they are technically. They're all at support, having pulled back a little bit along with the bad news. And the only thing that's actually moving on the weekend, which makes Bitcoin a good bellwether for everything else, is Bitcoin and the other alts. So it's only crypto that's moving. And sometimes when there's something that happens over the weekend, you can see the effect on cryptos, but you won't see it on the other stuff until we get the weekend gaps when the markets open up. But here we are seeing it live. This is a live chart. We pull back to roughly the channel center line and this sort of ledge here where I've got a line across. I'm aiming for the top of the channel. And I think that when we get to the top, and we've got to redraw this because and here's another problem, right? If we don't get up to the top of the channel, we're going to have to move this along now because things have changed a little bit. Time has passed, basically. So just move that along a little bit. But if we don't get to the top of the channel in the next couple of days and we start moving down rather than up, that's very, very bearish for Bitcoin. That would be a channel or a bear flag top failure, which means that the bear flag is even more valid than it was while we were drawing it. And so a failure to reach any channel, not just a flag, a bear flag, bull flag, rectangle, any form of channel, a failure to reach one side or the other once the channel is established means that that is the failure. And we may have failed here at this horizontal, not even having the strength to get up to that top line there. And therefore, instead of following that red line down, which is the natural exit for this bear flag, following the flagpole into it, bear flag, measured move out takes us down to 48,000. That's where everyone thinks Bitcoin is going. The fractal from this previous move, let me show you, that move there, right? Identical sort of move. If we put that fractal here, something like that, that takes us to 48,000. And we've almost followed that fractal identically so far. That takes us to exactly the same price. That's what most people think Bitcoin is going to do. I don't. I'm completely open to this moving either way. I'm not convinced it's going down to 48, and I'm not convinced it's going up to 108. I think I'm completely open. I'm long on Bitcoin. I'm bullish. We added a little bit more, tiny little bit more last week in the lows down there. In fact, you can see my green arrow. That's where I got extra longs. Let's just make sure you can see that. So there's the green arrow. That's where I added some more. We're coming back down towards that level now, which is not my favorite thing. I don't want to have to hedge or get out of that trade, but that's what it's doing. But my general thinking is that risk assets are going to go up and not down, and that should include Bitcoin and the others. The other one that I like very much is ZEC, by the way. I've forgotten I had bought 5 of these coins, 5 ZEC coins down here at about just below $100, and forgot about them. They're not even in my trading account. They're in a crypto wallet. I bought them just at this level here where we broke out of that previous swing high. And this is quite a long time ago. This is going back to October last year, and I just put them in on my soft wallet and left them there, and look how it's gone up. There's some people that think ZEC is going to go up to the thousands and tens of thousands or hundreds of thousands of dollars per coin, similar to Bitcoin. Some people, and I don't know, I have no clue, I don't really care. Some people think that this is better than Bitcoin. I think that's doubtful, but those in the know, and I'm not I'm basically a Bitcoin maxi myself. I think unless something else comes along that proves to me that ZEC or Ethereum or Solana is a better bet to invest in, I'll look at that, but I don't know. Anyway, so I'm still long on Bitcoin, as I showed you earlier. Doesn't look, it's either way. Now on gold and silver, we're going to get to energies shortly. I'm just going to touch on these. I'm still long on gold. As I said in the video last week, it's 50-50. Now I'm looking at it. It looks even worse, perhaps a little bit weaker. A big spike high up on Wednesday, up into the 38% Fibonacci level here, and rejected quite sharply. We might be able to push up. Once again, the theme is that risk assets, and these are not risk assets. These are risk off assets, I suppose, gold and silver, not so much silver. Copper is definitely a risk on sort of asset. But, I don't know. I have a feeling that we may have to visit lower, and I have a path for each one of these. Let me quickly show you. I'm rambling again. I want to get onto energies because, so that's the extreme that could happen on gold. I think if we're going to drop, it's more likely we'll get down to the 200 period moving average here, and the area where we bought on that last dip, we took profit on that trade. We've just started to look at nibbling at new longs again, but we may have to dip down and allow for a little bit deeper, maybe down to 4,000. I don't know. I'm going to go with the general direction, which is up on gold so far, until it starts really moving down. I'm going to stay with that, but we've only got small positions on so far. I'm not convinced. But silver, I'm a little bit more bullish on. And there's my long position. We've taken our shorts off. You can see I've got a long position from miles up here at around $100 on silver, which you might think of, well, that's really weird. Why would you be holding on to a long at $100 when we're right down at 70 something now? But this long position was paired with a short position. It was a hedge. So we were long and we got hedged, or short and we got hedged, whatever. I can't remember which way around it was. And we took profit on the shorts down here. So although that one's still open, we've taken the profit on the short from the same level, roughly the same level, maybe a bit higher, I can't remember. But now we've unhedged, added some more longs, having taken profit on the short, reducing the average price from 100. So we're at about 100 there and about 70 something here. And the average between the two of those is our average price, somewhere in the middle here now. And if we start moving up, I'll add more size to get longer. And if we start moving down, I'll start to re-hedge and wait for the bottom. And I think the bottom, pretty much like gold, and I think silver will roughly follow the same path as gold, but probably more vigorously, has a similar opportunity to dip down into the breakout triangle and perhaps get down below $50 and just stop out a few of those very long hands at around the $50 level, and there's a lot of them. It's also where the 200-day moving averages and the point of control on this chart. I think we're going to have to get there. I don't know. I'm long. We've got a little bear flag in the middle of the page that we broke down through the bottom, but not convincingly, and we're still holding in the moving average cluster. Let's see what happens. And of course, if there is even more concern about the Straits and Iran and the oil price, etc., that will tend to put pressure, upwards pressure, on precious metals and risk-off assets like gold, somewhat like silver, not so much like copper. I'm also long on copper. Let's just talk about it while we're on this page. And we got long at the bottom there. We have another long from over there. They're both in profit now. And copper is one of my favorite instruments this year. I'm going to be really focusing. I did mention earlier at the beginning that I forgot to mention copper. Copper is one that we must focus on. I think copper's got a very, very strong demand ahead of it for munitions, electricity, building, AI, for everything. Everything needs copper, and a lot of stuff needs silver too. And so I think copper is going to be very in demand. And I did a little video. There's a short video on this channel, actually, a little short video on copper. It's an AI me video. It's an AI of me, but it's about copper and the reasons why I'm bullish on copper. Right. Having talked about metals, and I'm sure there's some questions, and maybe I haven't covered everything sufficiently or in enough vigor, but let's talk about natural gas and oil. I'm going to talk about oil first, and then we get on to natural gas. Oil's the more tricky one at the moment. Now, oil, as you know, has broken out of its rising bearish channel. This is the day chart on oil. And we closed on Friday all the way down at 89 bucks, below 90. And if you remember, I said last week that if we can close consistently below $90 on oil, on WTI at least, that will be positive for the markets. Well, we managed to do that on Friday. We don't know what the outcome of this peace negotiation failure will be, but I'm guessing that we're going to spike up. And I think I know where to as well. If we do spike up today, in a few hours' time when this market opens, I think we're going to have to visit that tiny little gap there above us and just do the necessary and fill that gap and come straight back down again and start moving lower and get down through these lows at about 85 bucks and start moving down. I think that's a pretty likely scenario, and we won't have time to hedge because we'll be immediately at about 100 bucks the moment the market opens, maybe slightly higher, 101. And so we won't have time to hedge, but we have our short positions on. We will get a chance to do something else though. And if it looks right, and if the timing of it is good, and if the candles look right, and if the news looks good, and if everything else lines up, and we're going to have a look. I clean forgot. We're going to go back there right now. The COT report. We're going to have a look at the COT report. We're going to have a look at some of the other stuff. I've got a whole bunch of notes and other stuff prepared for you, which I didn't even go into, on the natural gas COT report and the gold COT report. I do want to go into those. I'm going to switch straight back to that as soon as we finish here. It's really important what's going on there. But there we go. I think that's more likely to happen than not when the market opens, unless there's something positive that happens before the market opens, which is also possible, and we just do nothing and we just carry on dribbling down. But I think we're going to have to get to that gap, and unless there's good news, that's probably what's going to happen. I'll be looking to sell the top of the gap at about $101.20. That's my strategy. All right. I do want to show you those COT reports, particularly the one on natural gas and gold, the two COT reports. Don't go away, folks. It's really important that we look at those. This is natural gas in its falling wedge, and I'm still long. Not much to add, really. We got hedged on Friday. I'll tell you what we did do. The moment we broke down through there, I hedged, and we moved down quite sharply, actually. We got all the way down to 261, bounced back up to my hedge level, and I got unhedged. So we're now unhedged and still long. We have a one up, one down, or one down, one up reversal candle pattern here, followed up. This is a 4-hour chart, followed up by a star doji full stop type candle. So 3 reversal candles following a couple of other ones over here at the bottom of this falling wedge on the 4-hour chart, and very, very cheap. I think natural gas is cheap, under $3. I really do. And so I want to be long on natural gas. I believe there's some weather coming up that might help in the next few days, some severe hot weather. So that could be good for natural gas. And of course, anything that's happened over this weekend that might affect not only oil. Of course, if oil spikes up, natural gas would be under a bit of pressure, tending to tick down, but not necessarily. But we may see some gapping around on natural gas as well, because there are oil fields in those straits as well. And the largest oil fields in the world are there, the Qatari oil fields. South, whatever it's called, Hams or Bands, South something. Someone will put it up in the chat, I'm sure. All right, so I'm long on natural gas, but now here's the thing. What support do we have below us? Because we need to find a hedge level, and I'm going to go to the day chart and see where we are on the day chart. And, you know, it's not good that we've broken down that last swing low going back to 25th of August in 2025 last year, and that was at 271. That was the level we were talking about. We've swung down into a slightly lower level within that falling wedge and into a cluster of support, all in this region here to the left-hand side. It's an incredibly messy area, and it's not going to be easy to trade. Once we get into this sort of stuff, those of you who are trading with me in 2023, 2024, and 2025, and there are some of you around who have been trading with me natural gas for 3.5 years, traded through this chop, traded through that collapse and the sharp rally, another collapse, and then this zigzaggy, choppy rally, which was really unpleasant to trade. We did really well on the rallies. In fact, we've had a really good run on natural gas. We're under a little bit of pressure on this trade at the moment, and we've broken down through support. But we are into that very messy zone, and I was hoping we wouldn't have to get into here, really, because once you get into that quagmire, let's go back a few years, if we can. We can't. Yes, we can. So there we are. And notice that we can go lower. Natural gas can go lower, but I think that we're in a higher price market at the moment, and that around about $2.80 to $3 should be the rough low. Allow for spikes down below that, like we did down to 260. So I'm hoping that this will hold, but if it doesn't, and there are no clear, and this is why I said it's annoying, because there are no very clear levels now below us to work off. But you know, the best we can do is look at the 4-hour chart. This does look like a very, very neat falling wedge. And if we extend that line further back, the black line at the bottom of the wedge, you can see how it's been respected many times over the past. And in fact, all of these arrows at the line were actual trades that we took. So these are real trades with real money that took place at the line, interestingly, the same line that we've reached now. And so if we hold here and manage to bounce out, the first thing I want to do is to see a close above 271. That's this flat top above us over here, and the 20-period simple moving average on the 4-hour chart. If we can do that, close above 271 and the 20 SMA, which will automatically follow, then I'll add some more size on this and look for this to rally. If we move down, I think I'm going to have to hedge this. If we move down below 261, maybe at 259, the best thing would be just to hedge it and see what happens next. Even if it's going to bounce out of there, faking us into a short hedge, it's worth the risk. It's not, it's a less risk getting hedged and losing out on profit opportunity than it is not hedging and blowing your account. It's weird how many traders choose to blow their accounts by not using stop losses or hedges rather than protecting their accounts and losing out on profit opportunity. That's the biggest thing with hedging, is that the moment you've hedged, you've taken away your profit chances. If you're fully hedged, you could partially hedge. You've taken away your profit chances, but you protected your account. Which one do you prefer? Do you want a blown account, or do you want to lose some profit? What would you prefer? I mean, it's a pretty simple calculation. So if this starts dropping down, I'd rather lose profit opportunity than blow my account. I'm in no danger of blowing my account. I don't use leverage much, if at all. So most of my trading is, not always, I have a bit of leverage here and there, but most of my trading, most of the time, is unleveraged. So it doesn't matter what the markets do, really. If natural gas is, unless it goes to minus $402, I won't blow my account. But I don't want to lose money. I don't want to lose money, and I don't want to hold on to a losing bag, and I don't want to hold on to a losing trade, because that's capital tied up that I could use in another trade, something else. I could be buying Bitcoin or gold or lithium rather than trying to buy natural gas and hold on to a losing trade. Doesn't make any sense. It takes away opportunity by holding on to a losing trade as much as it takes away opportunity by hedging a losing trade. You're always going to lose opportunity when the market moves against your direction. It's better to hedge. So that's what I'll do with natural gas, below 260, probably 259, but I will add more longs on if we close above, on a 4-hour basis, $2.71. Pretty simple, right? WTI oil, I've told you what I'm going to do. I'm going to sell again at $101.20 if we get there. If we don't, I won't add any more. And I think that's pretty self-explanatory, folks. The other things that I'm long on are uranium and lithium, going fantastically well. I don't have time to talk about those right now. I'm also long on copper, fantastic. Hedged on silver, long on gold, as we spoke about. And then NASDAQ and S&P long. German 30, we took profits off that. So I'm no longer long on that. And I think if the dollar does slump down, the euro and the pound are going to gain against the US dollar. That will drive the German 30 down, and it will drive the NASDAQ and the S&P up. So I'd rather be long on US equities, not long on European equities, another maybe even short, actually, to be honest. So long on US equities, not long on European or British equities, and short on the dollar. And I think that's kind of, and therefore risk assets going up too. Folks, I think I've covered quite a lot there. Let me go to some of the questions, if there are any. I don't even know how many people are here or who's here or anything like that. I'm feeling a little shell-shocked about it, to be honest. So, and I'm glad you're here, Robert. Feeling very shell-shocked about all of this. So gas went from, gasoline. Thank you, Roby. In Maryland, gasoline went from $4.20 to $4.09. Wow. Wow. That's interesting, Roby. So that would be as a result of the peace talks beginning. And now that they've failed, I guess gasoline will go the other way. It's a good idea focusing on these 8 instruments. Yes, it is. Thank you, Martin. And we're going to be day trading Bitcoin tomorrow. BT sealing off before the open is not really. Yeah, it's neither here nor there. But I think it's because of the other stuff, because of the peace treaty failure. Thank you, Ritesh. Thank you. Thank you, Roby. Gasoline dropped. You live in Maryland. Maryland. All right. Pede Vanu. I hope you have copies of all your YouTube videos on your hacked. No, I do not have any copies. Pede Vanu. No copies. 0. All gone. 2,000 videos. Oh, COT reports. Thank you, Larry. Don't go anywhere, anyone. Let's talk about the COT reports. Right, let's go back. I'm going to have to switch pages here. Thank you. I am so forgetful. I think it's part of being like really old. It just happens. Let's stop screen and let's go back to that previous screen. Share screen, window. And COT reports. Here we go. This is super interesting, everyone, by the way. Right, let's look into the COT reports. Right. First of all, before we do that, this is my new channel, folks. It's called James Trading. I'll probably change the name soon back to Arcus Trading or Arcus FX. But this is it for the moment. Make sure to bookmark it. Click the subscribe button if you have one, which you will if you haven't subscribed, and click the join. There's no join button because it's not a membership channel. So just click the subscribe button. All right. That's my new channel, but I'll change the name. This is my Arcus FX channel over at X. It's still called Arcus FX, unhacked and pristine, and you can see I'm live at the moment. Please come and join me on X, folks. I post up on X all day long, and I'm going to be doing so even more going forward because I won't be doing as much, perhaps, maybe I won't, but as a little bit different on YouTube. But I will try and do a lot more stuff on X. So go and join me there. You'll see there's all sorts of charts and my whole saga on the hacking. And I'm trying to get hold of the YouTube people through X. And apparently it might be possible. I think there's a very tiny outside chance. And then the weekly dive. This is the notes, folks. If you want to get hold of the notes in the private group, they're there. Let's look at the COT report on natural gas, and then we'll look at the COT report on gold. I'll finish off with these. These are very interesting. And this is about a week old, but I want to show you how cheap we are on natural gas compared to the seasonal price. We're down at 260 odd. Seasonal average at the moment is about $3.30. But let's look at this. This is interesting. The COT report. Let me just check on there. Make sure you can all see that well. Yes, you can. All right. Now, this is natural gas. Okay, it's a bit too. Yeah, natural gas. All right. Let's look at the commitment of traders. Commercials. 572,000 contracts long, adding 7,000. This is natural gas, adding 7,500 contracts to the long side. 410 short, taking off 6,000 contracts from the short side, clearly swinging long. But remember, commercials may be hedging as well. So they may not be long, they may be short, but hedging the shorts. And not, but they have closed some shorts, as you can see, quite a lot, actually 6,000. Producers, 232 long, adding 3,500 contracts to the long side, 242 short, almost perfectly balanced, but taking 4,500 off the short side, swinging long as well. Managed, and this is natural gas, managed money, 157 long, adding 8,000, but 243 short, adding 26,000, heavily short, adding a lot more to the short side, managed money. Have they got it wrong or have they got it right? I don't know. I don't know. We're right at the bottom of that falling wedge. We're at a very low price. We're below major support. We've entered the messy cluster on natural gas. The shoulder season's coming to an end. We've got very hot weather coming up in the US. Are they wrong or are they right? Non-commercials, 212 long, 212,000 contracts long, adding 8.7, but 396 short, and adding a lot more to the short side, 25,000 short, heavily short. Let's ignore the swap dealers for now, and then let's look at the rats and mice, you and me, and also big contracts here. I say rats and mice, but these are big. 55 long, adding 600, 153 short, taking 1,269 off the short side. So much shorter. These are the retail traders, assumingly, and others, but retail traders much shorter, but taking some off the short side and adding that on to the long side. So if anything, I'm reading here that we're seeing a groundswell and underswell, not quite urgent yet, not quite clear yet, not obvious yet, but a swell, a swing gradually to the long side across all of these different trader types. Commercials going longer, producers going longer. Managed money, however, going shorter, which is interesting, but everyone else going longer. So are the managed money traders wrong? I don't know. They might be. Technically, it looks like we're at a pretty important level. Now, this is gold, and I want to point out this is also really, really interesting. And I don't look at the COT reports every week, maybe every couple of weeks, but this is gold. And I noticed something interesting here too. Look at the commitment of traders. First of all, obviously the average price is, compared to the 5-year high, we're at $5,000 compared to $2,000 thereabouts. The 5-year average is only $2,000. All right, so commercials, 57,000 contracts long and 251,000 contracts short, much shorter than long. Once again, those could be hedged positions, but they're taking some off the short side and some off the long side, more off the short side. So maybe that was a hedge position, which they're now releasing to go back to the long side, right? So taking those hedges off, minus 8,000, and swinging back to the long side. This is gold, and we're at the COT report. Producers, 11,000 long, adding 700 contracts, 31,000 short, adding only 120 contracts. So once again, swinging to, well, these lot are swinging to the long side, but not much going on there. And then managed money, 120 long, adding 600, and 30,000 short, adding 3,500. So managed money, quite long, not massively long anymore, but quite long, but adding a lot more to the short side. Maybe that's a hedge as well. Maybe they're long and they're hedging. Fair enough. It's difficult to know whether it's a hedge or a position, directional position. And then non-commercials, 205 long, taking some off, 2,500 off, and 49 short, adding some more, a little bit to the short side, but mostly long. And then other reportables, retail traders, 84,000 long, taking quite a lot off, and 18,000 short, adding some on to the short side, taking off the long side, adding onto the short side. So super interesting. But what is interesting is the way the commercials have swung heavily short, but now taking some of the short side off, adding back onto the long side, or maybe not just yet. And so once again, I think that maybe gold is in this flux period where there's a swing from being hedged on the long positions to unhedging. In other words, having short hedges against those long positions, unhedging gradually now and swinging back to the long side. I don't know. As I said to you on the charts, I think gold has a chance of moving further down, and so does silver, and so do all of these traders as well. And both, the commercials, non-commercials, all of them think that there's. It seems to be a bit of a mixed picture. If anything, there seems to be a groundswell on natural gas swinging to the long side, and maybe the same thing on gold. And I'm long on both of them. And that's all I want to say about that, folks. Once again, just remind you, my new channel, James Trading, that's where you are at the moment. And join me on X, on Twitter. and join the private group, because tomorrow we're going to be doing day trading on Bitcoin here or in the private group. But if you're not a member of the channel, you won't be able to participate in it. It's going to be a bit of an experiment. I think it's going to be super duper exciting, and I'm looking forward to it. That's assuming I'm not hijacked again by someone else. Yeah, so no copies. We talked about that. COT reports. Thank you, Larry, for reminding me, mate. Fully laddered there, fly boy. Fly boy. Thanks, mate. No worries. No worries, Martin. Long natural gas losing patience because of war. However, the war is having no effect on natural gas, even when natural gas producers have been offline. What are you looking for the price to get to 370? Yeah, 375. 375 MT. I think 350. Look, let's try and get to $3 to start with, right? The levels are clear. It's $3, 325, 350, 375. Let's see how we go. But if we get down below 261, as I said, 259 probably, I'll hedge the entire lot and just wait. I can wait for a long time for natural gas. We're going to be busy trading other stuff, Bitcoin, etc. Stocks. We've got good long positions on Bitcoin, on stocks, Nasdaq, S&P. A few of the names that we long on doing really, really well. It's just energies which are super tricky. And I think metals as well. I don't think it's very clear on metals whether we're going up or down. I think copper's going up. Silver probably. Gold, I'm not too sure. And they may diverge a little bit as we go along. Anyway, that's where we are, folks. I hope you enjoyed the stream. It's been about an hour, which is cool. I have no clue how many people participated or if everyone found their way. I don't know. But please come and join us in the private group. This is going to be my main vehicle of communication. And of course, you can join. I was going to say you could join the YouTube channel, but you can't because this channel doesn't have, it's not monetized. So there's no joining this channel. But you can pop into the videos when they're live. Bookmark this channel. Click the subscribe button and the bell, the notification bell. All right, folks. Thank you all very much for being present. I appreciate it so much. I really do. And I thank you for coming to the new channel. Sorry about all the kerfuffle and everything. I'm looking forward to making some money over the next few months. I really am. I'm going to be hard at trading, less YouTube, more hard trading. And maybe it's a good thing. I think YouTube can become a bit of a weird, addictive creatorship type role. I don't make any money. Over all of those years, 3.5 years, I think I made $10,000 from that YouTube channel. So that's probably $3,000 a year, maybe. So what's that? $300 a month, something like that. So it's not about the money. I mean, that money paid for my Wall Street Journal, subscriptions for things, which is great. $300 is $300, but it's not a money-making scheme for me. And therefore, it's not that serious that we've lost it. But for a lot of other YouTube creators, it would have been terrible, absolutely terrible, 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 terrible. And for a lot of people, it's their livelihood, their business, their job. That's all they do is work on YouTube. And YouTube does this all the time. Google does this all the time. AdWords do this all the time. The Google slap, the YouTube slap, the AdWords slap, and they take millions of people out of their businesses every year. And they don't care. They just don't care. That's the way it is. So don't run, all I'm saying is don't start a YouTube business and hope that it's a secure form of income, because it's not. And I've never seen it as that. I've just appreciated the few dollars that I've been able to use to pay for journals and subscriptions to, financial magazines and so on. So folks, have a wonderful evening. I'll be back in the private group a little bit later on. For those of you who are there, come and see what we're doing. I'll be announcing the Bitcoin day trading setup in the private group. So I'll tell you all about it there. And I'd love to see more of you come and join us there. Just come and support us. I'd really appreciate it. It'd be great. All right, folks, have a great evening. I'll speak to you again soon. Stay tuned. Hi there, I'm James. I'm the founder of Arcus FX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.